President Trump taking aim at the Biden administration and the Federal Reserve in a speech yesterday to the World Economic Forum.
Over the past 4 years, our government racked up $8 trillion in wasteful deficit spending and inflicted nation-wrecking energy restrictions, crippling regulations, and hidden taxes like never before. The result is the worst inflation crisis in modern history and sky-high interest rates for our citizens. I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us.
Joining us right now to talk about Fed independence and, of course, next week's rate-setting meeting is former Kansas City Fed President Esther George. Esther, what did you think of the president's comments about that, about thinking that interest rates should come down? And by the way, he said to reporters later he knows better than the guy in charge.
Well, good morning, Becky. I think this posture is not a new one, and certainly not for the Fed, that there is a prodding to move rates lower. And in fact, the Fed, as you know, has been moving rates lower. There's been a significant drop in rates over the last few months. But to the point of what impact that has on the Fed, as many others have noted on this program, the Fed was designed to have some political insulation around this so that it can make its decisions consistent with the mandate that Congress gave it. And as you often hear the chairman say, in service to the American public.
You have said that you think it's a time for the Fed to be a little careful, just in terms of where they go next with the rate policy. I don't know that you were in favor of the cut the last go-around, were you?
Well, I probably would not have been in favor of making that cut. And again, because as we look at the disinflationary process that's been underway over the past months, it has seemed to stall out. And so while you haven't seen a reacceleration inflation, we also haven't seen the kind of movement down toward the Fed's target, I think, that would really call for continued rate cuts. And of course, following that December meeting, the Fed has acknowledged that and said they're going to be on hold for a bit. They're going to look at the data again before they make decisions about where to move rates.
Will that speech from President Trump yesterday make any difference, that he will demand that rates come down?
No.
How can you be so sure? I mean, we have heard every president basically in some way, shape or form kind of hint that they would like lower rates. It certainly helps the economy to have lower rates. How does the Fed withstand the pressure?
Well, it is pressure in the sense, Becky, that the public hears this. The desire for lower rates, obviously, as you've seen, has implications for borrowers. But the Fed must follow its legislative mandate. Congress has told it that it is to bring prices to a low and stable level. And I think the Fed has defined that for itself as 2%. And so there is room to go. And I think in the long run, this institution has to think about those objectives rather than be swayed by outside commentary and political pressure that may come its way, as it has for its entire existence.
Yeah, Esther, I mean, it's probably worth emphasizing that even within the committee, the FOMC, it feels as if there's a pretty broad spectrum of views about whether the disinflation is sustainable and you can bank on it. Governor Waller last week seemed pretty confident that you still are going to have some of the kind of restraints on inflation coming through. Some of the more recent rental data might be helpful in that regard. So it seems as if there's a pretty healthy debate which would already exist no matter what was being said outside the Fed, simply because we're at that point of maybe getting closer to the neutral rate and having some mixed data.
Yeah, it's a very good point. And I think when you look just at where the individual committee members have outlined their forecast in the dot plot, you see that variation coming through because the economy has seen disinflation. We have seen that rate of inflation come down. But of course, the test for this committee is to achieve its target. And we're now going into the fifth year where inflation has continued to run above that target. And I think the stakes become higher then for the committee to really try to assess their level of confidence in whether that disinflationary trend is going to continue and over what time frame. Because at the end of the day, and you hear the committee say this often, they need long-term inflation expectations to be anchored. That has given them the space to be able to be patient here. So watching those carefully to make sure that continues to be the case is going to be important for them as they make decisions about their policy rate.
And Esther, really quickly, you know, economists have raised their expectations for inflation this year. How do you think the committee will talk about tariffs and immigration as potential drivers of inflation for the rest of the year? Or do they not factor them in until we actually see the policy?
Yeah, well, it's difficult to factor them in with any sense of confidence because we don't have clarity yet on how those will play out. I will tell you, though, just in the context that this committee is talking about these issues is quite different than the one I would have experienced in 2016 and 17, which is that was a time when growth was lower, inflation running below target. Today, they face a very different environment. So as they judge the nature of upside and downside risk to this economy, that's where I think the discussion about tariffs will be relevant to them.